Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Let me fix my camera here. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. We've got a lot of earnings to discuss. We're going to talk about why it feels like there's been a lot of overnight reversals in the market of late. We also have jobless claims, initial jobless claims at 8:30. Can't forget about that. And our guest today is Frank Holmes. He is the CEO and CIO of U.S. Global Investors. He also runs the Jets ETF. That'll be at 8:35. Joel, give us a quick recap here on the overnight session.
Oh, the bulls were busy last night. We had a weak close, but I was looking at the big tech stocks and they weren't weak. We had a little dip off that 415 close, got to 28.23. That basically matched your lows from Tuesday. Turned around and then the bulls just started lifting offers. We got ourselves back in the area of yesterday's high as well as Tuesday's high. We're up at 46 and a quarter handles, 2879.75. Friday, or the high for the week so far is 89.75, folks. So only 10 points away from a major breakout to the upside. Crude bouncing around, but all in all, it's up $1.87 at 27.48. Gold in the green by $10.10 at 1698.60. Silver going the same way, up 18.5 cents at 1520. And Bitcoin trying to get another close over 9,000. The futures are up $40 at 9,380. Dennis, we got to talk about these late day sell-offs and then these overnight moves.
It's some big overnight moves. There was a good point. Where was it on my Twitter? So Endless Capital on Twitter. I just gave you a follow, Endless Capital, there too, because he had this nice tweet. The past 3 overnight sessions on ES, it's up 83 handles. In that time, the ES has only gained 42 handles. So the regular hours have actually took us down 41 handles. So it's interesting. Like, you feel like the last 3 days have been really bullish, but not even all of it, like more 83 handles has been overnight, and a loss of 42 handles or 41 handles has been in the regular session. So, I mean, if you're just trading intraday, it's actually the predominant trade from the last 3 days has been down. And if you saw yesterday, obviously we were down the majority of the day. We opened up at the highs and we just kept leaking. The separation here is incredible too. So two parts to just what I was going to say is you were seeing everybody buy tech. It's tech. That's what's held us up. Yesterday was really, you could see it because the QQQs were up and the IWM was down. So tech is what has been holding us up the whole time, and tech is still leading the charge here. And it seems like every time some type of big tech stock dips, it's a buying opportunity. When these other stocks dip, it's a little bit of a different story. But what's your make? So let's go back to this overnight action because they're jamming it overnight. We know after 8 p.m. to say 4 a.m. when stocks are actually closed, you can't trade those unless you're TD Ameritrade, and they're not going to get much action there too. You basically can't trade stocks between 8 p.m. and 4 a.m. But we're jamming the ES up. Is this shenanigans happening? Why are we seeing such rallies here overnight and no follow through during the regular session?
I just think, alluding to what you said, right? Stocks close at 8 o'clock, right?
Yes, 8 p.m. Yeah, Eastern.
Yep. And also there's been a noticeable decrease in the E-midi volume overall, right? I don't know if it's because of exchange activity or we've just settled down, but there was a point where we were trading, well over 3 million shares. So there's a little bit less liquidity, right? And if you watch that ladder overnight, I mean, there's just not much there. So if you have, boom, stocks shut down at 8, so you don't have arbs like you keeping things in line. I mean, if you have enough capital and a big enough account, you could just lifting offers, right? And once things get going in one direction, because you look at the rallies here and they're pretty steady. It's not like, you do have a big bar that was around 315 after Europe opens, but you can, and then so that, that lifting offers creates other programs that are looking for a higher market. They could care less where the stocks go, right?
Because the stocks are going to run to where the E-minis are at 4 a.m. They really are. And they know that the stocks, like people like me, I'm going to do the same thing. I'm going to buy stocks. If I can buy the stocks cheaper than the E-mini, I'm going to buy the stocks. So, and when stocks reopen, it's not like there's, a lot of bids and offers at 4 a.m. There's nothing. Nope. So they just get pumped up to where the E-mini is. I mean, if you wanted to manipulate markets, and we're not saying these are being manipulated, but if you were going to do it and manipulate the market overall, the time to do it would be at midnight because it is thin, because there's nothing else really to hedge with. Like you said, we get the European Open, depending, if it's a UK Open's different, I believe an hour difference then. But 2 o'clock, 3 o'clock, 2:30, right in there, you get that opening. So then it starts to thicken up because you have other markets. But for the most part, yes, Hong Kong's open, Japan's open, but for the most part, it gets really thin after 8 p.m. And it's always been the case. That's why you see these big moves. I mean, I'm doing arbitrage. There's a lot of people like me doing arbitrage until 8 p.m. Once the stocks are gone, done. I leave my desk. So liquidity dries up substantially after 8 p.m. because there's no stocks to arb with, no U.S. stocks to arb with, no ETFs to arb with. They're all closed. So that's when you see the big moves. And that's why you see a lot of big moves. It's just the natural, there's going to be more price impact. If somebody's maybe this is an institution that wants to buy E-mini, they're going to move price a lot more to get the orders done during that time. So if you're a big institution, you're listening, you're trying to, get a price at midnight. I mean, it's trickier. It's thin. I mean, majority of U.S., traders are sleeping. It's thin then.
And also, and we're not, and I really want to be specific on this. We're not talking about like one group or one person. I mean, what if, it's definitely, it takes a group, right? So it's a group of big players that are doing this. It's not, it's
big money,
very hard to get, big, yeah. So it's just, I think people that are running systems overnight, I mean, they're just keying off price and volume. So your systems are running overnight. I don't know if you had too many that were just, shorting every pop here overnight. So I think it's just, it's a phenomena. We've seen it both ways. We go to our S&P SPY argument. This kind of plays into that because the SPY such. I think eventually the SPY is going to be 24 hours, Dennis. I know.
I think so too.
I don't want you. I know you don't want to hear that.
I want to sleep. I think so too, Joel. I think eventually, and I know people are going to say, "Oh, we see the TD Ameritrade commercial, and it's 24-hour trading already." That's not really true though, because the exchanges are actually closed. As TD Ameritrade market makers just making a market if you really want to get in and out. And I'm sure if you've got the E-mini here, so let's say you got the E-mini trading, and look at my hands right here. They'll make a SPY market for you out here. So if you lift their SPY offer, they're just going to hedge with the E-mini. That's what the market maker is going to do. But I'm assuming the volumes are probably very light on that. They're only making it on the ones that they know they can hedge out with the E-mini. They're not going to do it on
there's only a handful of ETFs that are available.
Obviously, because you have to be able. I would do it. I mean, I would do it. Why not? Why wouldn't you do that if you were those market makers? And if your market is here, I'll make the market out here, and then all of a sudden, if I get filled on this offer, I can just lift right here, and I make that little spread. That's how it works. So if you're wondering how they're doing it, like I'm not in, and I'm just imagining how they're doing it, but it's common sense. So if you're a market maker, you can figure out how the market makers are doing it. Every time you would lift an offer in a platform like that, they're going to arb you. So it's going to be wider than, and that's the way, that's the way banks have worked for years. I mean, you just think about everything, they make it on the spread. You do a currency transaction, your bank. Well, the currency's trading here, they'll make you a market here, and they make it a little spread on you. That's how it works.
All right, we got a big earnings parade here, right?
Yeah. We got a huge earnings parade, and we got some big names, like widely followed names, widely retail followed names. And do you want to start with your stock there, Joe? Because it's not my stock, and not anymore. It's your stock.
When did you sell it?
I did not want to take it through the print.
Okay. And that's the reason you bought it.
No, I bought it because I thought it would have a run up into the print. Remember?
Okay.
Rewind the tape. The stock
You're
ran,
right.
so we're talking Peloton. And I bought the stock about a week and a half ago. And it kind of just meandered around. I paid in the 31s and just kind of hung out there for about a week and a half. But I said it on the show. I said, I think it's going to have a pre-earnings run, and I think that they could potentially blow the numbers away. I said that too. And I was torn. I kind of wanted to take it through the print. I kind of didn't. So here's what I did. The stock closed the previous day. Where was the previous day's close? 30, just grab it there. 36.22. I threw my order out 5%. I said, if it runs another 5% of the print, I'm going to sell it. And I left my desk. Obviously got executed. I came back. It closed actually almost right exactly where I sold it. So I sold it. Obviously, seller's remorse. Here it is up 18%. I'm not participating in that whatsoever. And I thought the company was going to beat, but I also thought it had run up pretty good. So I was scared of the whole price to perfection aspect of it. We saw Shopify have really good numbers too. And that it eventually came back that day, but it sold off a little bit on it. And I thought, maybe it's going to sell off a little bit on it too. What I didn't account for is how much they would pump this on CNBC, how much they would talk, not like a pump and dump, just like how much they would talk about it. And it was talked about all night by major traders. And it started right away with Josh Brown. So after the print, Peloton was chopping around. It started to leak. So after they had earnings last night, give us the earnings, Spencer, and then
it sounds like you just need to listen to our afternoon show, Dennis, because I was on the
you were
bull
talking
train.
It too.
Yeah, I was talking it up, and I am
everybody talking it up.
I am participating here, unlike you.
Good job, Mr. Israel.
You know what? This is scary. This is something that all three of us. This may be a first.
It was a fun one. I did not want to take it through the print. I obviously should have. But you know what? I don't mind. I made 25% on it or something in a week and a half. It was a good trade. I didn't want to see my gains go away if, for whatever reason, that they sold it on good news. We saw some companies get sold on good news.
You never know.
You don't know.
You're right. You don't know. All right. So the numbers, the EPS, for whatever that's worth, it came in below estimates, 20-cent loss versus an 18-cent loss estimate. Sales, very good, 524 versus $485 million. They also gave guidance. They gave fiscal year sales guidance above the estimate. They talked about their subscriber growth, connected fitness subscribers up 94% on a year-over-year basis. Paid digital subs up 64%. Total members grew to over 2.6 million. Between those growth numbers and the guidance above estimates, it was a good report. Plus, then, as you mentioned, the hype machine is in full play.
The hype is what really has been driving this after hours. So again, we anticipated, we talked about this, that they were going to have really good numbers. I mean, you just see everybody, sticking in their home. It made sense. It made sense to buy the stock at 25, 28, 30. It was good buy on the pullback. So again, maybe the scalper in me, the trader in me, I don't like taking trades through numbers. This was a trade for me. It wasn't a long-term investment. People said, oh, this was in your long-term portfolio. This was designated trade the whole time for me. It's got a $12 billion or $13 billion market cap. I'm not investing in a bike company that's got a $13 billion market cap.
So you keep calling it a bike company, but you don't look into it. You don't have it, and you don't use it to work out. It's more than that. I'm not saying that there's not any barriers to entry, but it's more than
there's no barriers to entry.
Right.
Let's give a perspective. You know what the market cap of Planet Fitness is? Which has gyms all around North America. And you can argue that Peloton's going to be bigger, and maybe with COVID it's going to change things. It changes the dynamic. I'm not talking Peloton down here right now too. Okay. I'm saying this is why it's not going in my long-term portfolio, because I think 5 years from now, I think Peloton is still a bubble. I think it's not worth $13 billion. It's a lot of money. There's not a lot of retail companies that are worth $13 billion. Planet Fitness market cap is $5 billion. So you're saying this Peloton that makes the bikes is worth 2.5 times, or at least over twice as much as Planet Fitness. That might be the case if Planet Fitness goes under because of the COVID. COVID changes everything, and I love the Peloton story for that reason. What I did wrong was I did not anticipate the hype last night, and this is what really drove it. Because believe it or not, look at your after hours chart and bring it up. They were selling this stock off on the number. They were selling the stock off on the number. Bring it up. You'll see it in the first 5 minutes. This thing traded down to the 36 handle. Can you bring up that chart?
Yeah,
Yep.
1 sec.
I want to tell you how much the hype moves this stock. So
All right,
bring up the
you're up.
after hours chart. They started to hit
Here,
it.
I'll even pull
It went down to
I'll pull up a 1
36
minute.
even.
Yeah, there it is.
It went down. It was trading down in the 36 handle, down $1.50 on these great numbers, and heavy offered at 37. Do you want to know what changed it? Do you want to know how this
You
thing
told me. I'm
blasted
not
off?
going to say it. I'm not going to say it. I mean,
Josh Brown on CNBC, and it just shows it. And I love Josh Brown. Love you, Josh Brown. So I'm just saying how much influence CNBC comments have. Josh Brown says it was trading at 37, and he says, I don't have a position in this. He says, I wish I owned it. He's like, I'm kicking myself for not owning this. He says, I would buy it at 40 right now. He said that. The stock went up 3 points in a minute.
Yep.
Not joking. The blast off on that candle. You see that blast off? That wasn't comments from the company. That was the commentary from Josh Brown. It blasted off on those comments like no tomorrow. When he said that, I was trying to buy it because I knew it was going to blast off too, but the algos were all over it. The algos are listening. There's some really good algos out there. They are like on it in like 1 second, and they lifted the 37, 38, 39. It kissed all the way up to 40, like a minute after he said it. So unbelievable how much it moved. Then it sat there and kind of hung out between 40 and 41 until Fast Money came on, and they were asking the Fast Money commentators, and Guy Adami said he was so bullish this stock, and I think it was somebody else. It was 2 Fast Money commentators. I watched it go from 41 to 42 and a half in the next minute. And then Jim Cramer came on and closed his money piece with it and basically gave it another, how good Peloton's doing. And it blasted off again.
Wow.
So it had 3 blast offs, all from CNBC commentary. But it's a retail stock. It's widely followed by a lot of retail traders. So they're going to be jumping in on this. So when you get a retail stock that gets that much positive commentary from CNBC, it affects the price substantially. So love Josh Brown. And you know what? I agree with what Josh Brown was saying. I wish I would have bought it at 42. I wish I would have bought it at I tried to lift 37. When he said that, I clicked buy. I was at 36 and a half. I clicked to buy 37 or 37 and a half. I was trying to buy it. Gone. The algos were just all over Josh Brown's account. Somebody was really fast. Really, really fast. And if anybody human being got that, that's impressive, because I was on it really fast too. Again, some of these times it's CNBC. Some people had 10-second delay, some are 11-second delay. We know it's a 6-second delay. We talked about these delays before, so maybe there's some algos that are only 5 or 6 seconds. They got a 4-second lead on you. I don't know that, but I know there is some that are down as low as 6 or 7 seconds on the delay. So they got 2-3 second lead. It's gonna go. So it's unbelievable though how I've never seen a stock rip like that on a CNBC comment. But as soon as he said it, I would buy that right now at 40, it ripped. And it wasn't just me, also a market operative, great follow on Twitter. He tweeted it out too, same thing. He was saying, I can read you his tweet. He saw it too. It's not just my selective perception. I trade off CNBC. I know what moves stocks. And when you say something like that, it will move the stock. But if I just grab it, just as commentary from yesterday, yeah, Peloton sells off, he tweets, and then downtown Josh Brown, and I just lost it. Just hang on. It's refreshing on me.
That's okay.
It's a slow computer that I got Twitter on over here, the same one. So anyways, I'm trying to grab the tweet for you. But regardless of the tweet, it was the commentary from Josh Brown that really moved it. And Josh Brown wasn't pumping and dumping or anything. Like people say, oh, he's pumping and dumping. That's not the case. He said he didn't even own the stock. He was just giving his opinion. He was just giving his opinion. And Guy Adami was just giving his opinion. They weren't doing anything wrong. Not doing anything they're just giving their opinion. But their opinion is so influential when it's a widely followed retail stock like this one. Crazy move. And it honestly could have been down today on those numbers if there wasn't so much CNBC positive commentary about it. And it's not only that, it's been hyped. I'm not watching CNBC 24 hours. They're talking about it nonstop. You said you were even hyping. It's a story. The story is intact. So fundamentals don't matter at all. You can say, oh, it's not worth this. It doesn't matter because the story is intact. I'm not shorting Peloton. I wouldn't be surprised this thing's at 50. Today, I wouldn't even be surprised if it went to 50 because it's crazy. So, once the story and the hype is going, things can do crazy things. You cannot short stocks that have a kind of story like that because the hype will kill you.
Just talk about the short interest too, Dennis.
Is there short interest? I don't know where the short interest is. What is it on it? I've never looked.
I'm going to look right now because I don't actually know.
I
Whoa,
did look.
It's probably pretty good.
44%.
There you go. You
44.
squeeze the hell out of them too.
Yeah.
So there's so many reasons. I'm kicking myself. I sold the stock at $38 before the print because I thought it had a pretty big move. And I was like, I don't want to get in a situation when they sell off a stock on good news that everything's already priced in. A 25% move in 3-4 days
Huge.
Seems like a pretty big move. And you have it on for a trade. You've designated trade. This money is in there for a trade. It's not in your long-term account. I don't typically hold trades through prints. So I actually was willing to do it. I was willing to do it if it didn't have another big candle yesterday. But it did. I put the order 5% up. I said, if it runs another 5% of the print, I'm going to sell it. Threw the order out there and left. Got done in the afternoon. And obviously continue to run up since then. So congratulations to everybody who held it.
But you really played your percentages, right? And if that stock would have been down $5, which very well could have happened, then you'd be So don't worry about it. I mean,
no, I'm not. Great point. And this is one thing. This is bothering me zero because you know what? You've got to, if you're always looking at your trades and saying, everybody does it, but if you're always looking at your trades and saying, man, you know, why'd I sell that? I do it. Everybody does it. But if you focus just on, what you're doing wrong or just, how much money you're leaving on the table, that can affect your mindset on the next trade. Take your money, move on to the next trade, learn from it. What I learned from this was a hyped stock will go for a long ways. PayPal, same story last night.
Let's do PayPal.
Let's do it. Give us the earnings.
Wait. Can I just give for Peloton here? I'll just give you your pre-market high at 46.01, and I'm just going to stick with my what I said about Beyond Meat. And I said I thought I saw a seller at 112.80. If it took that out, 116. Boom, boom, boom. Same thing here. Your pre-market high is 46.01. And then just the last thing is, what about the people that were, or the algos that weren't short, they weren't long, they get the Josh Brown comment, they're just buying. Like they don't care about next quarter. They don't care about the next 5 minutes.
I was trying to buy. I don't have a sophisticated news algo to actually listen to commentary and be able to buy that. I'm telling you, there's a few people that do. There's a few people that's an impressive algo. If it can hear and trade off of it, that's very impressive. But it went so fast that I almost feel like maybe it's just a really fast trader. Maybe I'm 43 years old. Maybe there's some young buck that's 23 years old. Maybe she's got the CNBC feed that's 6-second delayed, and I'm on the 11-second or 10-second delay. I know it's different because at my cottage, I'm like only 7 seconds delayed for whatever reason. And at my house here, I'm 11 seconds delayed on my CNBC. So there is a difference, and you can get it lower. I'm sure there's some people have said there's as little as 5-second delayed on their CNBC. There's always going to be a delay because they have to do it for the swearing. So they're never going to be in real time. There's like a delay put into what they're pumping out. But it all depends. I mean, if you're on, we can talk about latency, but if you're on satellite feed, the signal's got to go up to the sky and come back down. And they got to descramble up there and come back down. It takes longer. You're on cable is always going to be faster. If you're on digital cable, if you're on like a box, it's going to be delayed because, again, they're descrambling and they're doing stuff with the signal. It's not coming right there through. I switched over to this, talking latency when we go on the side, but I switched over to, it was going to save me money. I was switching to this box at my cottage. I was like a 7-second delay on my CNBC on direct cable, digital cable. And then I switched to this box. They said, it's going to save you $20 a month. I was like, sure. They came and they installed it. My delay was 30 seconds on my CNBC. And I told them at that point, I was like, no, you're taking this back out. I'm like, this is no good for me. I can't be 30 seconds delayed on my CNBC. It's 20. It's ridiculous. So, I went and I called and, I had to find the other, and then somebody gave me the reason. They said the way it is, it's descrambling. It was through Bell. And I was like, or Rogers, it was through Rogers. And I was like, this is no good. So anyways, they were decent enough that they actually put me back to the digital cable. They said they can't do it. I was like, oh no, you got to put me back on digital cable. Like they were going to take my digital cable box away. I wouldn't let them take it away. So because they said once you switched over this box, they were trying to get people off digital cable. I was like, no, I'm going to go back on digital cable because I cannot be delayed 30 seconds. I mean, you might as well just shut CNBC off and forget about it altogether. If you're going to trade off CNBC at all, I mean, 30-second delay is an eternity. So, and there's it's not a lot of trades off CNBC, but I'm saying on something like a Peloton, that moved it. That moved the stock.
All right, PayPal.
PayPal, similar thing, good report, story stock. Actually, this is a really good report here. The adjusted EPS, 83 cents versus a 76-cent estimate. Sales of 4.62 versus 4.75 billion. So a slight sales miss, but a big earnings beat. They withdrew their guidance for the fiscal year, but they did give EPS guidance for the current quarter, and they see Q2 EPS growth at 15 to 20%. So quarterly guidance, no guidance for the year, and very nice bottom line beat, which you don't see too many of these days for PayPal.
Stock dips, but it is a fintech company, and anything tech, they just want to buy it. Anything tech. So it dips last night, and they turned around and they just started ripping. And it had a significant dip last night. This kissed down almost 120, did it not, Joel?
Let me take a. Yeah, it did. It almost got to 120. It got 120.05. So your whole number of people who are out there.
It was trading down a bit too, and there was a lot of positive commentary on PayPal last night too, which probably helped it out. Not like Peloton, like everybody was really pumping the tires of Peloton, but I don't know what was said on the conference call, but it started to really rip, I believe, slightly after that. So I wasn't listening to it, so I can't, say exactly what was being said. But all I can tell is, often you see these big moves, and then you see, another move afterwards. It's usually the conference call. So I'm not sure what was said on the conference call, but stock really started ripping up, and obviously it's continued to rip right to all-time highs. So here's a company that's got a story. Story is completely intact. And people are buying stuff online, and it's a way that you process payments online. So this is the kind of story that the market likes right now. And so it's not surprising they bought the dip in PayPal, and they're ripping it higher here this morning. CNBC was just had the CEO on there, and I ripped another $1.50 on that. So the story intact.
A little bit easier here, blasted a new all-time high. We are trading at the highs of the session, up $13.04, 141.50. So just keep an eye, see where they take this to at a pre-market. Use that as a potential target, but you're really in no man's land here. So really hard to give you any specific level except for that, whatever that pre-market high turns out to be.
And this is like the e-commerce play, right? This is like the pure e-commerce play. So that's obviously the only reason that retail companies can make money right now, more or less, because their stores are closed. So the CEO talked about this being like a tipping point for e-commerce and for digital payments. So yeah, I mean, a lot of bullish commentary here, and the hype machine isn't full effect. We are about a minute away from the latest initial jobless claims data. So keep that in mind, Dennis. The estimate is for another 3 million Americans to have filed for unemployment benefits last week. That would bring the trailing 7-week total to about little over 33 million people, which is just ridiculous. So it's good to see the number declining on a weekly. It's been declining for the past few weeks, but still 3 million people is a lot. That number is coming here in under a minute. So keep that on your
All right. I mean, we know it's going to be bad, but we know it doesn't matter. Pre-market high 81.50. We got some good numbers above here, folks. And if the Bulls really want to put the hurt to the Bears, what they're going to do is they're going to take it through 29 to 89.75. That was your high on Tuesday. That psychological $2,900 level. Last Thursday's close 29.0250. Never really got a good look at that because you had the Amazon getting hit in the after hours on Thursday, and we opened much lower. But really, we're really back in the area of Friday's high, interday high, and the highs. But 89.75, that's the top number in my sheet here. Wasn't anticipating this big of a rally this morning, but that's where it is at 28.89.75. We'll see what they come out here with the jobless claims.
I don't see any movement.
There it is. It just came. I just saw.
Oh, there we go. There we go. Okay, so 3.1 million last week, which is a little bit above the estimate of 3 million. So yeah, not much movement. that I'll just read you off the readings from the past few weeks. So the first week that this chaos really started, March 21st, we had 3.3 million. We went up to as high as 6.8 million, and has since declined to 6.6 million, 5.2 million, 4.4 million, 3.8 million last week, and now 3.1 million this week. So we're slowly coming back down to earth here, but that does bring the 7-week total now to over 33 million people, which is just ridiculous.
Nothing. It's a non-factor.
Non-factor. I mean, we've accepted the fact that a lot of people are losing their jobs. Think about the stuff that this market has just accepted now. We're accepting that 2,000 people are dying a day. We're fine. The market is fine with that. They're fine with, millions of people losing their jobs. I mean, like a crazy amount. We're fine with historic unemployment rates being as high as they've been since the Great Depression. This market is just fine with everything. And you can't logically trade this market. You have to if you start thinking logically, you will sell everything in your long-term portfolio, because we're in a lockdown. We've talked about this, and nothing makes sense. It doesn't make any sense whatsoever. We're sitting right where we were 6 months ago on SPY. And if you go at the chart, you can look at it and you can see what I'm talking about. Back in October, we were right here at 284 SPY. And now here we are in May, when the world's in shutdown. We've got a deadly virus out there, and we're at the same spot we were. And it's just the fact that people are scared to not be in stocks, and they think the Fed will defend this market no matter what. So they think they have the Fed put. They think if the market goes down, the Fed's is going to come in and defend the market, and it's going to drive it right back up. And how can I argue with that? I'm not arguing with it. I mean, I have a lot of cash because I don't like the overall scenario we're in. But at the same time, I still have a lot of stocks too. And I don't see how you can fight the Fed and fight this market at this point in time. I think there's issues coming. I don't think we're out of the woods. And that's why I'm not going all in. And that's why I'm still 60% or 65% cash in my long-term portfolio. I'm always like I said, I'm always 30% cash. I went through the financial crisis. I'd never go 100% invested again. Not in stocks. And and the preferred stocks, I've sold most of those because I just think there's too much risk to be getting 4 or 5% on a preferred right now. So, you can look at the PFF and you can say, oh yeah, why not just throw it in the PFF and get 5.3% on your money? You know why? Because I saw what it did in March. And we're not out of the woods on a financial crisis. Don't kid yourself. It could happen. I'm not saying it's gonna, but I'm not taking a risk and trying to make 5% of my money and then risking a financial crisis and watching my money collapse. So my preferred portfolio is sitting in cash. That's where a lot of my cash is right now. The stocks now, I've been doing the allocation and adjusting. I'm buying tech. On pullback, I buy tech.
Tech was so strong yesterday. If you looked at it, and that's why, the close was the close and it was weak and everything. But I looked at the top 5 components of the S&P 500. I combined the Googles. Google was in the red by just a little bit. But all these stocks were, they got hit off earnings a little bit, but they were all above their earnings day. Microsoft, Apple, Amazon, and Dennis, that Amazon's at the 50% retracement of that move. So I talked to you about that yesterday.
Yeah, I sold the trade portion of it. I kept the long-term. It's sticking to my long-term investment account for now. It's still, I know the valuation makes me a little sick to my stomach, but again, I think Amazon's eventually a $3,000 stock because it's just consumer habits have changed enough that they're going to continue to buy a lot more stuff online. The convenience of it. My wife loves the convenience of it. People who hadn't been doing it and are doing it now are like, wow, this is so good. Consumer habits have just changed enough that's just going to continue to
We get something
Amazon.
Every day. We get something every day. Every day. Yep.
I let the box. Do you let the box kind of sit there? I usually let the box
for a couple days. Yep.
Yeah, I let the box sit there. Let it, like Lafari said, let it bake in the sun there for a little bit on your doorstep, and then throw it in the garage and let it sit over there in the corner for a day or two before I go ripping into it.
See, that's funny because we were doing that, and I've stopped caring at this point.
At a point, you know what? That's such a good point, though, Spencer. You do stop caring at a certain point.
It's hard to keep caring.
It is. It is. It's a great point you're making because it is hard to just keep up with it. I mean, it's sickening. You have to do this. And, my wife took me a picture of me getting the groceries yesterday. I got the gloves on. I got the mask on. And I got a system here. And I put everything on the garage floor. and then I take what is in a box with my gloves that can come out, and I shake it out of the box, and then that stuff can be touched. If it was like machine packaged, I can touch that stuff, and then I do the Lysol wipe down of everything that has to be in the package. Then I take the fruit inside. If we don't get a lot of fresh fruit, but we have to do some fresh fruit. I wash it for like a long time in hot water. I tried the soapy water on it, but then somebody was saying that can make you sick, soapy hot water. So I think it's going overboard. So I use hot water.
Don't have me over for dinner, man.
You're washing your fruit with soap? Is that what you said?
Yeah, I know. That's why I did the first time, and I'm like, okay, this is getting a little bit ridiculous.
Your kids eating bananas and they're blowing bubbles. You're like, what the hell?
Well, bananas are okay because they're not eating the skin, but when you're like doing like an apple or a plum or something, or like something that's going to soak up with the grapes, and soap water, it's kind of sick.
I'm getting us off.
Or the raspberries and soap water, it's kind of.
All right, let's bring Frank on.
Let's get Frank on, please. Frank Holmes is the CEO and CIO of U.S. Global Investors, runs the Go Gold ETF and the Jets ETF. Frank, good morning. I hope you don't wash your fruit with soap.
No. But we spray. But we do spray, alcohol diluted on all bags that come to the front door. And leave them there. And we're fortunate. We're in sunny San Antonio, so Texas, and so it's hot, and things dry quickly, and then we bring them in.
All right.
Everybody's got their system for this new world.
Everyone's got a system, right? All right. So, Frank, let's talk airlines here. We had you on maybe like a month or so ago, and a lot has happened since then. We've seen some recoveries, but not in the airlines. So, kind of talk to us about where the industry is right now, and I mean, in the wake of Buffett selling, there's you gotta say negative sentiment is at an all-time high.
Absolutely, and what's really shocked me in a positive way is that over $500 million went into that ETF after it fell. So Jets, it was a $50 million ETF, and it's a smart beta. It recalibrates every quarter and looks for the highest cash flow returns on invested capital, both domestically and foreign. And it's overweight to the four big airlines: Southwest, United, Delta, and American. But what to me was most interesting was that most of the money that came into that fund came after it fell. So investors are waiting for is it going to be a U-shaped bottom or a V-shaped bottom? And I think we're getting positive news that states are starting to open up. We're at a small increase in TSA, showing that they're screening more people, and that's going to be the new indicator. Like following the Dow Jones, you're going to follow how many people TSA is screening. And a year ago it was 2 million, and now it's about 200,000. And we're going to have to get that rising. So a third of all travel was business, and you're seeing Southwest all of a sudden really start focusing on the business travel, cleaner jets, distancing between everyone. So I think it's just going to be a gradual process, but nothing like what we had after 9/11, those long lineups of 4 hours and the screening process being so difficult. I think there's lots of focus on how can they fast track, because airline travel is so significant to economic growth.
We're on the line with Frank Holmes. He joins us. He is the creator of the Jets ETF. Frank, let me give you a different perspective on this. All right. I was talking with a good buddy of mine. He follows the markets, not as closely as you or I do, but he is 100% convinced that what's going to come out of this pandemic is that the airlines are going to be nationalized, that they were run so poorly going into this and so inefficient, and we do need the air travel, that really the only way out of this is for the nationalization of the airlines. How would you argue against that?
Why? I think he's way off.
How come?
I think that why? Because the returns on invested capital. Warren Buffett, when I first launched this 5 years ago, people said, "Oh, Buffett doesn't like the airlines because it was a bad experience with U.S. Air." And I said, no, it's going to change. There's a moat around this industry, and they're able to throw off incredible cash flow returns on invested capital. If you look at 10 years ago, the ancillary fees were $5 billion globally. They hit $100 billion, and that basically offset high energy prices. If you take a look at the money they spend on baggage, they used to lose billions of dollars on baggage. They implemented so phenomenal software that the cost of lost baggage dropped to something like 92%. And they had the free cash flow to buy back their stock and increase their dividend. So I just really find that difficult to grasp when you just look at the metrics that how they were running that business.
I mean, they're not going to be able to have, I mean, you know, I don't know what they're going to do as far as social. They're not going to be able to have as many people on planes. I think, you know, besides the nationalization, and this is why I can't touch a stock like Boeing, I don't think you're going to have these super big planes anymore. I think it's going to be a big shift to smaller planes, less people on it, more room. I just look at like how, you know, of course they can't prepare for a pandemic like this, but I look at the efficiency rates that they're running at now. Okay. And who knows when we're coming out of this? I think that even when people come out of this, the first thing these unemployed people do is not going to be hopping on an airplane. So I'm not all for the government, you know, taking over things, but I just think that over the years, you know, that the airline, I know you've talked about some of the efficiencies, but they have a lot of inefficiencies too. So,
what about
that's
merge,
just
Frank? What about, you know, forget about the nationalization arguments. Should some of these companies maybe join, like maybe, you know, join forces here? Is there a possibility there where we could get, you know, obviously, you know, some synergies in that way, like looking at the synergies from a potential merger between companies?
Well, you can take a look at the most efficient and company has been Southwest Airlines, but they're predominantly just domestic.
Yeah.
Whereas United, America, and Delta, they have a big part of their profits come from overseas travel, and in particular the business class. The business traveler is, you know, a third of all travel for Southwest Airlines business, but it's more like 70% of all profits for them. So if you really, you know, this guy's betting that the economy is going to be a disaster. So, you know, I bet on American ingenuity. And I think what you saw after the lessons came from 9/11 and then 2008, that there wasn't a fast enough thought process of how to resolve flying, because 1 in 15 jobs are associated with flying. It's a huge economic boom to get people flying again for the hotel business. So you take a look at the multiplying effect of the airline industry. Yeah. I think that Washington understands that they have to get behind it. And I think it will happen. I think it'll be much faster than when TSA first started. It took a decade before those lines. Remember, they were screening little old ladies in wheelchairs like they were terrorists and infants. And all of a sudden now you can get through those lines in 15 minutes and pre-check, etc. So I think they'll resolve it. But the nice part is there's a real effort every day in the newspaper talking about what they have to do to get people flying again. Very different than 2008-9.
But Frank, if it seems like they're going to have to, at least for the time being, function when we do come back with less capacity, with, I don't know, 50% capacity, 60% capacity. How can the airlines be profitable running at with the planes that empty?
They will find a way for this. I mean, I'll give you another classic example for flying. The cost of cargo. We have gold funds, and we track the price of gold. The price of if you want a gold bullion, you wanted a coin, not a futures market or a GLD. It was $100 an ounce, went to $135 premium. Why? Because a lot of gold, physical gold, moved between London and New York in BA or American Airlines in their cargo. All of a sudden, those flights aren't taking place. Private jet went from $30,000 to $300,000. That got tacked on to physical gold prices. So the supply lines are also disrupted for cargo delivery. And so that's why I come back to the significance of the airline industry for so many components of business is very critical. And I see a complete different interest in reigniting that. So clean air, they're going to take temperatures of you. They're going to be able to zap you with an infrared to say, you know, you got a temperature, you can't fly. Are they going to
refund your ticket? Are they going to refund your ticket?
Refund your ticket?
If you're sick.
Pardon me? If you're sick, they'll refund it. There'll be too much of a complaint for them not to do that. And all you have to do is have Southwest say, we'll refund it. But I think you're going to see that going on. They're going to make changes much more rapidly than they've ever done before. We're not going to wait 10 years. I figure the max is going to be about 10 months that they're going to do everything. Because when you read all the articles of what's taking place in Washington, lobbyist groups, etc., making the airplanes cleaner, that's already in motion. There's new infrared lighting that I know in San Antonio is an invention of robotics, can clean hospitals and kill every virus. You're going to get new technologies going to be able to be implemented in this system like never before.
Frank, one tailwind.
So I remain constructive.
One tailwind, lower cost of oil, the low cost of fuel here. That is one benefit that, obviously investors aren't considering whatsoever as they sell the airlines down, to lows here. What are your thoughts here on, if oil stays down for a prolonged period of time, this does benefit the airline industry?
Huge. It was the biggest cost, and it dropped to the second biggest cost. And I think coming back to the idea of capacity, there's lots of great photos from bloggers of all these, by the way, airplanes that are on stranded airports, like lined up. So they'll just drop the number of paths. You'll just have less flights, and they'll find a way to price these things because they're using so much artificial intelligence from baggage to people movement, etc. So I think we're going to be a lot safer. But let's look at the data. People get dying. It's really simple math. The median age is 82 years old. The median age for catching this virus is 55. 65% of the people that died in Pennsylvania are at old age homes. Right. So the idea of profiling and protecting those people, and maybe they don't fly for a while. Maybe they just can't fly. Maybe that way you're going to protect it as the rest of society tries to implement what's taking place in Sweden, that they're able to do business. I'm in the crypto mining business with Hive Blockchain, and we're mining in Sweden. And it's a complete different business model. Social distance is important, masks are important, but business is still going on.
One friend, you just talked about, like, if the people are sick, they're not going to, first of all, like flying on planes before this, when someone coughed, you were looking around, you're like, please cover their mouth. And now I can only imagine what that's going to be like when we start flying a lot again. But my question is to you is, okay, so you go to the airport, you check your bag, you go into check-in, you're going on the plane, and you have a slight temperature, and they say you can't go on this flight. So you're going to have to delay the flight to get that person's bag off so they can go back home. Isn't that really going to, how are they going to be able to manage something like that?
Well, they do it now. They so often, if your baggage don't make on an exchange flight or they stop the plane. So I think they'll just fast track it. And the AI is just getting better and better. Okay. The technology is really, to me, is remarkable. That this AI now can recognize you 80% of the time by the cadence of your footsteps. Now, it won't become really significant, just like iPhone with facial recognition, until it was 93% accurate. But the AI is getting more and more accurate to find your bags, locate your bags, also locate if you had a temperature. That's going to go into a system and tracking and where you were. So I see other countries in Asia where you need an app. If you're ill or you've been quarantined, you have to have an app. You go outside and your phone's going to start ringing.
All right, Frank. Frank. Well, one more real quick. How long do you think will it take for the airlines, if ever, to get back to where they were as far as capacity and flying in like December or before this crisis? How long will it take to get back there?
I think it's going to take 18 months to get back to the 2 million people a day flying. I think we're going to get back to 1 million people flying by Christmas.
All right. Frank Holmes is the CEO and CIO of U.S. Global Investors, runs the JETS ETF, also the Go Gold ETF. Frank, as always, thanks for the time and be safe out there.
Same with you. Bye.
Thanks,
right.
Frank.
Thanks,
All
man.
right. You want to talk Costco real fast?
Let's talk a lot of stocks. We got some catching up to do.
So first time since I want to say July of 09, I think around there, that Costco's monthly sales declined. Their April sales fell 1.8% last month, but e-commerce sales were up 85% on a year-over-year basis. This is me.
We knew this.
Yeah, well, this is me because I haven't been to Costco in 2 months.
Yeah. No, neither have I. This is the same thing. I was going to Costco like crazy, stock up before all this stuff happened. We knew people were pre-buying, and that obviously they're not going to know. And now they've got so much restrictions. Like I know at our Costco, you got to stand 6 feet apart. They only let so many, like you were saying, only let so many people in the store at once. I mean, there's no doubt that the stores and the sales in the physical stores are going to start to go down. So this is not like, whoa, what happened to Costco? I mean, this was going to happen. So not surprising, their e-commerce sales are going up a lot too. We never even bought anything online on Costco.
No, me neither.
Before, and my wife's doing it now, and they deliver. I didn't even know that they'll deliver your stuff or something. That's at least what my wife tells me. I haven't seen an actual Costco delivery here yet, but do they deliver in your? In Michigan?
I don't know.
They do. It takes a little bit of time.
Yeah,
but
well, that's what I'm wondering, because she said, "Oh, they're going to deliver this." I was like, "Oh, great." And then, but we haven't seen the bags yet, so I don't know the Costco stuff. So maybe it takes a week. I don't know. But we knew this. Like everybody's stocked up on their pantry, and now they're good for a little bit. I mean, so people are going to go to Costco less. They're going to go everywhere a little bit less right now because they're scared of getting sick.
I think you're just going to have a big change. Lisa's been buying different stuff. Costco, whatever the places we go to, but we got to notice like this local restaurant that's closed down. They hooked up with like a local farmer, and they offered this fruit and vegetable, like these boxes, for I don't even know how. I mean, incredibly cheap. So Lisa, I'll go check it out. She went over there and she picked up a box of fruits and vegetables and carrots and onions and potatoes. They incredible. Made a carrot soup last night and it was cheap. I mean, so I think, these farmers are, there's a generational change going on. People are not going to be going out to eat as much, and they're going to be, using the resources that they have and to make the best. And I tell you, it was some of the best vegetables. Sometimes you go to the store, the fruit market, I'm sure you paid it a big discount. So I don't know, big generational change there.
Everything there is going to be consumer habits change. Which ones are sticky and which ones are going to go right back to the way we were in 18 months. I mean, that's the key to try to figure out if you're long-term investing here, what is sticky and what is not. I will tell you, counter to what Frank was saying a little bit there, I think there's going to be less business travel in the future. I think that is sticky. Because one thing, companies are realizing, holy crap, we can save a lot of money by using, Zoom or Teams or, or Cisco WebEx. We can save a lot of money by not flying across the country to, do this deal. So I think you're going to see less business travel in the future. I don't think business travel is ever going to go back to where it was, because companies have learned, man, this is huge savings,
so much
and people
cheaper.
like it better too, probably, that I don't have to go fly across the country. I mean, there's going to always be some business travel, but there's definitely some business travel that was happening that probably wasn't essential, and some stuff that can get done through just a virtual meeting. So that's a sticky habit, and that's concerning for the airlines there too, but also good for companies like Zoom. Again, the Zoom story is intact. So, if you want to talk Zoom, I mean, the stock's starting to show some life here again too. So, it's up here again this morning. It's starting to show some life. Again, valuation will not allow me to put this into my investment portfolio, but as a trade, it starts to look pretty attractive here again. So, because the story's intact. So I just think, a lot of consumer habits are going to change. Some are going to be sticky and some are going to not. Maybe in 2 years, we're all going to restaurants like we used to. That is possible. But I think there will be less people traveling, less business travel, just because it saves companies a lot of money.
Yeah. All right. Can we go to Twilio here? Speaking of tech, high flying. Yeah, let's do Twilio. They reported earnings after the close yesterday, and they were really, really good.
Yeah.
EPS, they made 6 cents. The estimate was for an 11-cent loss. Sales of 364 versus 331 $1 million. So a very nice beat and a beat for Twilio in the first quarter. They also gave Q2 EPS guidance and sales guidance, both of which came in above the estimate. They reported over 190,000 active customer accounts, which is up 13%. 13% on a year-over-year basis. So a beat and a beat on their earnings, a beat and a beat on the guidance. I mean,
tech.
It's incredible.
Cloud is hot. Tech is hot. The stock has doubled in the last 6 weeks. Doubled. Huge company. $68 we were back on March the 16th at the low. Now $152. We've more than doubled. If you're sticking this in your investment portfolio now, you're doing it backwards. Again, these things, I'm not shorting it. It's making a new all-time high. We'll never short a stock making a new all-time high because it continue to rip your face off. But holy mackerel, everybody is just FOMO in tech like crazy right now. I mean, Square is trading up on its earnings report. That was an epic disaster of a report. Square was a disaster. You know what, though? It's fintech. It's got tech, it's got a story, and people are buying it. Those Square numbers, we didn't get a chance to talk about it, were not good. The stock was down $5 last night, deservedly so. Doesn't matter. It's tech. We're going to buy the dip on every tech stock. That's the money manager's mentality right now. If a tech stock dips, I got to buy it because I need more exposure to tech. And Square dips last night. PayPal dips last night. Immediately, even Peloton dipped. Obviously, the hype of the media really brought that one back. But dips are getting bought on anything that's got a story and anything that is tech right now. It is insanity. It feels like 1999 to a certain extent.
Oh, come on.
No, not come on. It does. In tech right now, stocks are doubling in a week, in 2 weeks, like Shopify, to go from $300 to $733. The company's got a $80 billion market cap. It's got $2 billion in sales.
Bigger than the Royal Bank of Canada now.
Exactly. The biggest bank in Canada. I mean, this is, stocks that are value are absolutely hated. Stocks that have a little bit of growth or a lot of growth in case of Shopify are loved. We are a little bit in 1999 in some stocks, not in the overall market. And 90% of stocks are in bear markets. But in these high growth tech names, it's buy at any cost, no consideration to valuation whatsoever. I've said I think Shopify is going $1,000 because the story's going to carry it. The valuation makes no sense whatsoever. It doesn't matter. It's got a story and it's got growth and it's online and it is hot. You got an online, you're going online, you got online sales like Wayfair. Doesn't matter, you're selling furniture, you're online, we're going to buy the hell out of you. It is like 1999 on certain stocks.
You had a monthly all-time high at 151. You took that out. You went to 158, I believe. So I'll use 158 as a target on the upside. You fell back $5 from that. Not much falling back. And then I guess if you're, if you want to protect some profits here, I think if it falls under that old double monthly top 150, you may get a little downside. But I don't think you get a whole lot because, there are, believe it or not, people out here shorting it, trying to pick tops here at 57.
Scary.
And they're willing to buy it at 53. They could care less about all the people that are short. Their mark is 122.40.
What's the short interest on this one, Spence?
I don't
Do you have it?
know.
Let me track it real fast. I'm
trying to bring it up too.
Yeah.
It's like
small.
14.
Small.
It's enough. You know what though? It's got a story going. It's hot. I don't want to be short I don't want to be short Shopify. The valuation makes 0 cents. Doesn't matter. Valuation does not matter. Write this down. Valuation matters 0 when you've got a hot story. That's the best trading tip I could give you in my 10 years on this show. If you've got a hot story, valuation matters 0. So you get people like Citron that are short in Peloton because the valuation makes no sense. Yeah, it doesn't make any sense. It doesn't matter. That story is hot as hell, and the hype will carry it a long ways. Twilio story, still hot. You've got, and just became hot. PayPal story, hot as hell. Shopify story, hot as hell. I will not short those stocks, even though the valuations make 0 cents. I will not short those stocks because the story is just too hot. Story could cool off. When the story cools off, that's when you strike. It starts to get like a bad quarter and people are like, oh, they're concerned about growth. Stories are not cooling off on these stocks right now, though. The stories are heating up still. Square to be up is insanity. But you know what? I get it. I understand what's happening. Money manager.
Can we
what
do
about
LYFT?
yeah?
We're running late.
I was
We're
going to say.
running late.
I was going to say.
LYFT.
I was going to say. What about LYFT here?
Same thing.
Yeah. Same thing. So I'll give you the numbers on LYFT. The Q1 EPS, they lost $1.31. They're only supposed to estimate to lose 64 cents per share last quarter. Sales beat $955 versus $897 million. Active riders up 3% year over year. They're also doing layoffs. That's from a couple weeks ago where they're laying off about 17% or furloughing 17% of the company. It seems like that the end of March wasn't enough to really affect their quarter.
There you go.
That much.
We had 2 weeks, so it was under 2 weeks. So you had the first 10 weeks of the quarter with normal, and then you get the last 2 weeks, and people are like, "Oh, LYFT isn't doing that bad. I better buy the hell out of the stock." You wait till that next quarter on LYFT. You're going to see an epic collapse in their numbers. Collapse. It has to. Nobody's riding in somebody's stranger's car right now. I would not buy I would not be buying a stock like this. Lyft and Uber, and I know they've come back a long ways. This is not like, the growth tech that is, it's tech. It's kind of techy, right? But this is, also, just something that is, I believe, in ground zero for this stuff. So I'm going to say the opposite. On Lyft, I would sell that stock. If I owned it, I would get the hell out of it. Because it's going to come to roost on Lyft and Uber. And this is just my opinion, but this is my opinion. At $30 here, I think Lyft is a screaming sell. And I think the next quarter is going to be a disaster, an epic disaster. You got to ride in some stranger's car?
Yeah.
So this is a gift. It was at $15. It's doubled since March. This is a gift to the longs. Uber, same story. Gift to the longs. The stock was $14 or $13. Where the hell was it? I can't even. $13.71 back on
and
the
Uber reports.
$30.
And we get Uber today.
They'll be fine. Those numbers are going to be okay for the quarter. They had 10 weeks of normal, and then there was just a couple weeks, where it's so they're going to be fine. These businesses were fine before COVID, but consumer habits are going to be in the gutter for a while. Like Frank Holmes said, 18 months in the airlines. I think you're 18 months on the ride sharing companies there too.
They were hurting. The trend was not good going into this.
Uber Eats helps.
Yep.
Uber Eats is part of the business that does help. Lyft doesn't do that though, do they?
No.
They should be.
LYFT Eats.
No.
Does Lyft have that?
No.
I
Uber
don't
Eats
think so.
helps a bit. The people are saying Uber Eats. That helps a little bit. But again, to just go and say I'm going to ride in some stranger's car, I don't know about that. So I think the next quarter for Lyft will be an epic disaster. Again, that's a long ways away, so I'm not going to go short it right now. But I'm not going to stick around long enough. If I was long this stock, I'd be ringing the register and thanking, that I got a lot of my money back, or potentially maybe you're setting up a lot of money. It could go. They could keep running. We've got, still, the economy's opening. There's a case here, so I don't want to go short this thing right now. So I'm not saying short Lyft here today at 30.10. I'm saying if I was long it, I'd sell it because I think the next quarter is going to be ugly.
31.10. That is your pre-market high. So you definitely, if you want to see continuation on the upside, you need to take out that 31.10. We're a buck off it. Just kind of consolidating. Let's see any daily highs here. After that, if you could clear 31.89 is your 4-day high. Triple D, we've kept you 4 minutes after. We still, Spencer, do you have a few minutes to stay on? Because
there's a couple more I want to get to actually.
So Dennis, you could hop if you want. We missed a few stocks.
I just want to look at some companies that are reporting after the close today. Some candidates that could rip: Roku and Dropbox. This is the tech theme.
I'm just gonna say on Roku, if you see a dip, unless the market really sentiment changes here overnight, or today, because sometimes you see the markets you get killed or something. I'm not saying that's going to happen, but if the markets are holding up like they are right now at the end of the day, and Roku dips $10 on numbers for whatever reason, it probably pulls a PayPal, probably pulls a Square. When Square can rally on that report, it's telling you there's underneath demand. Roku has a huge story in time. So it is the kind of stock that I would buy on a dip, not long-term invest portfolio, but as a trade. If Roku dips on the numbers, I would probably be nibbling on that.
All right, let's do, Spencer, let's just follow up on Beyond Meat from yesterday. Let's do Moderna and Trade Desk, and then we'll call it a day. Do you got time to do those?
Yeah, Beyond Meat. Oh, boy. Okay. Let's pull this chart up here. Wow. Wow.
Is it getting follow through? No. It's this is how I'd play this one. If I was long it and I sat through it all day yesterday and I didn't exit, I'd be keeping an eye on that close in the high. 126.21 was the close. It's a lot, hasn't closed that in some while. 126.50. That's the high from yesterday. You got another high at 126.10. So there's some resistance budding up there. After that, 120 stuck to 129. So I think if I had a big position and I was looking for follow through, I would see I would see if I could get some off up near yesterday's high. And then I just kind of nibble out going up to that 129 high. Because when it got up to that 129 high last time, it turned around very quickly. I'm not sure if it was news or a downgrade. Where to buy this thing on a pullback, you guys are going to have to use your own charts on that one. I could not tell you where. I just tell you, you just bounced off 121.10. You got a little bit of a rebound.
You wanted to do Moderna also?
Yeah, you got to talk about the hot stock.
Yeah, they had earnings after close. I don't know how much their earnings really matter, but they also in their report gave an update on their COVID-19 drug, and the phase 3 study of that is expected to start in the summer, sometime in the early summer here. So that is it's for the coronavirus vaccine, mRNA. 1273 is the drug, and they're going to start their phase 3 trial here for the vaccine soon.
Excellent. On your 15-minute chart, looks like someone wants to work out around 59. You're at 57. Two brackets, 15-minute highs, 58.81 and 58.85. There's a potential target. They came off pretty hard off those levels, but working back up to that. So there's some potential resistance in Moderna. I guess they're getting 600 people that are do not have the disease and giving them a vaccine, and let's hope that none of them get it. That'd be great news for everybody.
What was the last one you wanted to check out?
Someone said the trade desk, TTD. I don't know if they're out. Let's see what they're doing.
Okay.
They're probably out. They had good earnings. They
weren't on my list here.
No.
I don't see anything from the trade desk.
Okay. It's just creeping up here, up 776. Let me see what kind of volume here is. If what they're taking it up on here. They're taking it up on not a lot of stock here. I'd say maybe 5,000 shares have traded since 7:30, but it is what it is. It's trading up at 320. 320.97 is your pre-market high. So keep it on that as a potential resistance point. Former all-time high, 323.78. Or that's still the all-time high. 323.78 if you're looking for another target in the trade desk.
Yeah, trade desk is after the close today. So I'll just read off a couple of the stocks we're going to get after the close. We already mentioned a couple. I mentioned Uber, the trade desk, Dropbox, Roku. We're also going to get, let me find my list here. There we go. What jumps out? Zillow jumps out to me. Live Nation. Oh, that's going to be a disaster. Live Nation's going to be really bad.
But once again, Spencer, I mean, when did things go in? Some of the last 2 quarters. I know we were supposed to go to a country music concert. I can't remember when it was. I think it was in maybe mid-March or something that got canceled. So
yeah, but you would think they would be able to give guidance because they know. Like you would think they would know if their shows are canceled, right? If their upcoming shows are canceled for April, for May, for June. I mean, I think they would know that. So I don't know. I feel like this is going to be a really bad report. GoPro is also reporting after the close. I don't know how much we care about GoPro. BJ's will probably follow Costco's lead there. Yelp reporting. So a number of big names after the close today. All right. We went about 10 minutes long, but that's okay. I want to thank everyone who participated in our chats, all 3 of them now, both on YouTube and on premarket.benzinga.com, and, of course, on Benzinga Pro. Thanks to our guest, Frank Holmes. You can catch a replay of this show on our YouTube channel or catch the podcast on whatever podcast platform you prefer, whether it's iTunes, SoundCloud, Spotify, Stitcher, or TuneIn. Please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Joel and I will be back with you at 3:40 p.m. Eastern Time. In the meantime, everyone have a great rest of your day and be safe wherever you are.